Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to get through Twitter. We're going to be talking about I think there's a lot of uranium posts. It's going to be wealth related, commodity related, or financial markets related posts that I'll be going over. I'll be giving my financial opinions across the board. And if you want to follow me on Twitter, you can check me out at finding_finance. Or you can join the website, finding-value.com. If you're looking more for help with this commodity bull market, the potential companies, individual companies to play, perhaps market timing of some of them. We do have a discount going on, 50% discount, and that discount code is September for the monthly membership. It's coming on down. We got Cameco and Uranium have crushed altcoins and undone all of their gains, as our scientific weight of evidence-based technical analysis suggests that was likely. So this is Cameco versus altcoin index. So what they did is he priced Cameco divided by XAI, which is the altcoin index. There was a vast outperformance of altcoins, put in a bottom at 21.22, and now we're seeing a very large cup and handle that is broken out to the upside, where Cameco is destroying altcoins. This is where you want to make your money, guys. This is how you make purchasing power. Is you want to take an asset that is going to outperform other assets so you can buy more of those other assets. So Cameco looking really good in relationship to altcoins. We've got uranium supply squeeze all over again, question mark. I do think that we're in the 2002-2003 era. 2003, the MacArthur River mine floods. I know Cameco's having some issues producing the pounds that they want to produce. And is this going to be where we really take off? I can say this, guys. The uranium price, UX1, the futures pricing, it is starting to accelerate to the upside. If you look at this chart, once it starts to accelerate, it doesn't really slow down. It just keeps going up until we get a move that turns it to the opposite direction. Right now, it looks absolutely excellent for a supply squeeze. Now, looking back in history, I just want to remind everyone about uranium. Everyone do this. Go look up 1976, go look at the gold price, and then look at the uranium price in 1976. Tell me what that ratio is. Divide the gold price by the uranium price, and tell me what that ratio is. Put it in the comment section. And then take the current gold price today and divide it by that ratio, and tell me what the uranium price is. So 1976, gold price, I'll just roughly say I think it was like $150. I think uranium was like $120 or something like that. It was like 1.25 or something on the lines of that. You divide that by today's price, you're going to get well over $1,000 for uranium price. Now, here's the weird thing about this, guys. Here's the weird thing. Uranium was in a surplus in 1970s. Uranium was in a surplus in 2007. What happens when uranium is not in a surplus, where we have a lot more inventory that we can basically use for whatever reason? If we actually hit a hard deficit, I'd be curious to see what the uranium price does. And inventory levels really dive lower. So if Cameco is barely profitable at $60 U3O8 with their existing high-grade mines, mills, and infrastructure, and are struggling with finding skilled labor, equipment, etc., can anyone reasonably expect these new mines to get built in time to meet the demand? No. No, but you're also not playing those new mines as like a realistic thing. We're playing it because money is going to flow into it. We're gonna get huge money flows coming at this stuff. The price of uranium at $60 is far too low, guys. You could triple it. It's probably still too low. All of the numbers that we have are from feasibility studies that were done many years ago. So yeah, we're gonna have. I mean, the pricing's gonna go way up. Just period. It's obviously great for the physical metal itself, but I also think it's going to be positive for the mining companies at some point. Yes, it's going to be inflationary, but the price has to keep going up. It says, can anyone get rich if they work hard enough? That's what his question is. In my opinion, no, not anyone. I think the vast majority can if they work hard enough. I think there's groups in the world of populations that are not smart enough, no matter what they do, to be, quote, like really rich. People with IQs under 80, so to speak, they're not even allowed in the military. Military, I think, is like 83 is the minimum. So if you're under 80, you're going to struggle. I mean, you're not going to be able to keep up with society. So I don't think they can do it, but I think the majority of normal people, if they really want to, and they work hard enough, then yes, I think they can. But that's not everyone. But a lot of people could. If you make $100,000 a year, how much did you spend on a new car? None, zero. Buy a used car, get something that's really a good deal. I'm still driving my, dude. I got cars that are just they're POSs, guys. I've got a couple of cars that we drive daily. They're old, they're sun beaten up. They've got a crack in the windshield because in Colorado, it's like driving and sandblasting your car at the same time. A lot of rocks get thrown up on your car. So almost everyone here has split windshields for the most part, cracked windshields. And if the crack's not in your in your line of sight, it's not a big deal. If the crack's in your line of sight, then yeah, I'll change it. But I'm still driving really old cars. I'm putting all my money back into investments. I really don't care about a depreciating asset, or I mean a depreciating liability, I should say. I don't want it. A new car, you're just crapping money away, in my opinion. Being broke is hard. Becoming wealthy is hard. You got to choose your hard. I think a lot of people they are acting or pretending to be wealthy, but in reality they're broke. That is the problem. So becoming wealthy is not hard. It's a mindset. It's a discipline. I mean, people want to look wealthy. They want to front, and that's what makes them broke. In order to become truly wealthy, you're going to have to look broke for a long time. And that's the hard part is people who become wealthy were once broke or looked very broke for a long period of time to accumulate the wealth. So I wouldn't say, I think being broke, if you truly are broke, that is hard. And if you're acting like you're wealthy and you're broke, well, that's just stupid. And becoming wealthy isn't hard if you have the mindset and the discipline. Now, then it's more about creating a path and a vision to get there. I hate seeing these things. Cash flow over net worth. Guys, my God, this is so misguided. I can create a bunch of cash flow from a high net worth. If all you have is cash flow and you take and kill that cash flow generator, you're screwed. But if you have net worth, you have net worth. Net worth is always greater than cash flow. Cash flow is a temporary movement of money into your pocket. Net worth is the value of what you own and could be an asset generation where you just completely generate a bunch of cash flow. It depends how you configure that net worth. You don't have options if your cash flow is from your job and your job goes away. You have many options if you have a high net worth and your job goes away, your cash flow, to reconfigure your net worth to generate cash flow. Net worth is always preferable over cash flow. And what I can do is I can configure my net worth into cash flow if I want to. I don't have to, but if I want to, I could. It says, why do people work jobs they hate? Well, I think it depends on. I'm going to give you a scenario, guys. You worked at a job that you really, really love to do. You worked there for 20 years of your life. You get all these benefits. You get 5 weeks of vacation. You get all this sick time that you could potentially have. You get better benefits for being there that long. You get a good bonus. You get a good whatever, right? Then let's say another company bought out that company and you don't really like the new direction that the company is going. So you don't like the company that purchased you. You may not hate the job you do, but you hate the culture and the environment that is being created by the new company. The reason the person stays is because they have all that benefit that they worked for and don't want to lose. So if someone has been working for all these years, they don't want to lose the benefit. And if they're, let's say, 5 years away from retirement, just stick it out. So I think a lot of people are in that situation. I noticed that when we got bought out at our company, and I've gone through multiple buyouts now, most of the people that were over 10, 15 years, we all stayed. Everyone who was under 5 years, 10 years, that type of area, they all left. So the benefits, I think, are what keeping some people around that have been with the company for a long time. And if you don't have a lot of time left at the company, well, screw it. Stick it out for another year or two. Collect the paychecks, collect the benefits, take your vacation, do what you need, and just get paid for a couple more years. There's no point in moving, getting a minuscule raise, and losing all the benefits, in my opinion. What's the ideal number of vacation days per year? You know, for me, I've been taking we get 12 or 13, I think it's 12 days shared vacation. So we get that. I think taking an additional 6 weeks on top would be pretty nice. So it'd be 12 plus 6 weeks. So it'd be six, let's say 7, 8.5 weeks of vacation. I think would be pretty good as a bare minimum. 8.5 weeks. You know, I would be willing, if I could keep all my benefits, to take like 10 weeks vacation and just get paid less money. I would be willing to do that. And I would get, say, 3 week or 3 day weekends, like every weekend, and then take some of the weeks off throughout the year. I would totally do that. And I would get paid less money. I would do it. I would do it. But I also have multiple sources of income, and I don't need that job as bad as maybe some others. There are not enough commodities for the green transformation. It says a worldwide lithium shortage could come as soon as 2025. Yeah, I agree. And guess what, guys? What happens when you go short in these other commodities? You're going to create future demand for oil. Lithium is a conversion of oil, of soaking up oil and other energy sources. Same with all the other minerals. It's all oil demand. It's future oil demand. All these shortages, they're going to say, go do more lithium. Go mine more copper. Go mine more of this. And when Plan A fails, they're going to burn so much more oil trying to get low grades out of this earth. U.S. individuals have more money in their bank accounts than in 2019 per WAPO. That's kind of interesting, guys, because I know a lot of people say, oh my God, the bank account's inflation. Well, they still have more than 2019. So moving on to Grady, we've got XAG, which is silver, priced in WCU, which is world currency units. Historical breakout in the making when it's priced against world currency units. Generally, you see gold and all these other currencies break out against a bunch of other currencies first. Generally, what happens is the dollar strengthens with interest rates as inflation hits America. All of the other currencies depreciate against the dollar. Silver, gold, they all start breaking out against other currencies. And then when we have a problem in the United States or when things slow down, then everything kind of turns where the dollar weakens, interest rates go down, and then silver and gold go up in relationship to dollars. So we're going to see that come next, in my opinion. Nearly half of the global population is fed by synthetic nitrogen fertilizers. It's the Haber-Bosch process requiring nat gas, coal, or fuel oil. Then consider fertilizer accounts for as much as 70% of the production cost of rice and corn. Then add harvest, processing, transport, etc. So a lot of people are fed off of synthetic nitrogen fertilizers. Speaking of Monday, the ASX Uranium, massive moves to the upside for uranium over in Australia. Good start to the week there. We've got Scott. Scott says Cameco to Dow Jones Industrial ratio. Cameco says what's in store looks quite lovely, doesn't it? And it looks like we're ready to just rip to the upside for Cameco to vastly outperform the Dow Jones Industrial average. Here's uranium. ASX uranium stocks ripping higher Monday. Bannerman, one of our top picks, is killing it. Look at this thing go, guys. On the website, this is one of our top picks for uranium. Bannerman, we did load up in this dead period here, and we are enjoying the ride higher together. UX1, this is the futures pricing, inverted head and shoulders, shoulder, head, shoulder, and the breakout. Let's go, baby. Uranium's looking absolutely fantastic. Cuppy says, you need to appreciate the muscle memory amongst utilities and remember that the last big run happened when Cigar Lake had issues. These guys are all going to reach for pounds at the same time. So Cameco says challenges at the Cigar Lake mine and Key Lake mill will impact its 2023 production forecast. It now expects to produce up to 16.3 million pounds of uranium concentrate at Cigar Lake, a reduction from the previous forecast of 18 million pounds. I have this. This is Bannerman last uranium bull market. It returned an 80-plus bagger in 2.5 years. It looks like it was an easier ride. You can see not too many pullbacks as well. Will this next uranium bull market produce the same results? A lot of people who responded to this said, no, 200-300% at most. I don't think so, guys. I think we're going a lot higher than a 3x, in my opinion. Oil equities and energy service equities look solid across the board with inverse head and shoulders. Some of the individual equities look insane. We're breaking the neckline for XOP. We're breaking the neckline on the small cap energy ETF as well. It's already broken, and we're starting to move higher. OIH is also looking excellent. We've got kind of this accumulation thing going on in a channel that I think will break here at any second. So the entire energy sector with uranium too just looks fantastic. Here's gold. Not many people are looking at gold and silver mining companies right now. It's very cheap. When will the turn happen? And we're still at a very low level. I think that gold and silver mining companies or gold will turn up when the yield curve starts to uninvert. So we're just waiting for that yield curve to uninvert. It might take a little while, so just be patient, guys. I have an eye on it, and I do have an eye on it. Platinum's still outperforming quietly. We just continue to see an outperformance. Platinum and gold have been pretty equally matched, but platinum versus palladium, we continue to go higher. And platinum versus silver, we've broken out of the bottom of 33, and we're at 40 right now. And I think we're going to hopefully track higher where platinum outperforms silver. These are companies compared to uranium future pricing, just trying to help. Usually you get a bottoming pattern, which this is the base. We've broken out that base. We're coming back for a return move, and we're at that return move. That is generally where I buy. This is Forces metals versus uranium. And this is the ratio. We've got, I have the trading. So this is your basing pattern. You break out, you do a return move. That's one of the best buying opportunities. And then you start to work your way higher. Same with UU, got what I need. Sorry guys, had to do that. Double bottom, breakout, return move back. Double bottom, breakout, return move back is B. And then we have a move up to the upside. So ideal buy point for investors, that's what it looks like. And we're seeing it in the ratios for equities priced in the uranium futures pricing. I generally concur with this assessment. Interesting, he mentions how much metal prices will increase. Of course, metals increasing 400+% is impractical and probable. But I do expect 30 to 150% increase in metal prices, especially as fiat continues to devalue. And he's talking about all of the metals for renewables and how EVs are a scam. Really cool chart. Gold juniors are trading as if gold was at $1,400 an ounce. This chart shows that GDXJ closing prices from this era versus gold. So if you look at this, we're right here in the circle. This is last time the disconnect was this pronounced. And we're at some pretty crazy valuations in relationship to where gold is priced at. That spells an opportunity, a very big opportunity. And that's where I'm going to end it, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys like. We do have that discount September going on. 50% off the first month is what the discount is. And that's all I got. Everything still looks good for commodities. And I'm very excited for this week coming up. Hopefully you guys are excited. The sectors I'm watching are oil and uranium. So oil, uranium, anything energy related. I'm getting real excited for it. And we'll see what this week has in store for us. All right, guys. We'll catch you next time. This is Finding Value.